Good day, everyone. My name is Sue Busevich, and I am the Vice President of Support here at Padgett. I'm going to be your host for today's meeting. Welcome, everybody. This is our second Padgett tax update, and it's great to see everybody. And, you know, I need to start out by telling you a little bit about some of the difference between the last meeting and this meeting, if you attended our last update. We've opened this up to meeting features on Zoom rather than restrictive webinar controls. What that means is that you'll be allowed to participate by way of video and audio. Now, we will be recording this and making it available online, but understand that we will not be capturing anyone's video for that purpose. So don't let that concern you. If you do use your mic to ask a question, for example, the audio will be captured in the recording. But if all this makes you uneasy, you can opt out of the audio and video and participate by way of chat only. But, you know, we'd really love to put faces to your names. So join on in. As far as participating, there are two specific ways to do that. Down at the bottom of your screen, you will have a yellow raised hand icon. You can click that. You will then, your hand will be raised. And when it comes time for the Q&A, we'll go ahead and we click on that and we will ask permission to unmute you. And then essentially you've got the field to ask your question verbally. And if you don't want to do that, you can type a question in chat. To do that, again, at the bottom of your screen, there's an icon that says chat. You can click on that and use that to type in your questions. We'll also be using chat to do things like pass along presentation PDFs, any other handouts, a link to websites, anything that we may see fit as to, enter in there for everybody during the course of it. And I will be uploading those screens, the screenshots in just a minute. We may not get to all of your questions. Those we will address by following up with you after the meeting. Either if we run out of time, that might be the case, or if your question is so specific to the situation at hand that we feel that we need to handle it outside of the meeting. As before, plan for about 45 minutes. We'll have a short presentation and then open it up for questions. You all are muted. Again, if you do raise your hands, I'll ask permission to unmute you, and then you'll have the field. And afterwards, if you need to find or to speak to a local Padgett office, go to PadgettBusinessServices.com. We've got the office locator there that you can look up just about anything you need in terms of finding your local Padgett office and connecting with them. So let's go ahead and get started. I'd like to show you the agenda next. It is packed with both new and updated information. We're going to kick off with our corporate CEO, Jeff Phillips, and then bring you up to speed on the employer retention credit. And we know we have lots of questions related to that one. We're going to cover some important reminders and deadlines on the PPP. We'll cover a variety of 2020 tax return items and give you a sneak preview into the future. Now, our presenters today. Again, we're going to start out with Jeff Phillips, our CEO, Roger Harris, President and COO, and Annie Schwab, our Tax Services Manager. And with that, I'll go ahead and turn it over to Jeff.
Thank you, Sue. Great job. And hello, everybody. This is Jeff Phillips. Good afternoon and happy early spring. I want to thank you for attending this session, whether you're here live or viewing the recording. Just thanks for taking the time to be here. On behalf of the entire Padgett North American team, welcome. I'm very proud to be the CEO of Padgett Business Services. I'm also very proud to be a former business owner. I built and started a staffing company in the accounting profession. My wife is a small business owner. She's an interior designer here in Pensacola, Florida. My dad was a small business owner. He was an accountant, ran an accounting firm, and even two of my grandparents had small businesses in the farming business and the shipping business. So it runs in the blood. I think my sister is actually a small business lobbyist in Tallahassee, Florida. So it's in the blood at Padgett. It's in my blood for sure. And this is just a wonderful time just to be with all of you. Like Sue said, I'm here with Annie Schwab and Roger Harris. They're going to be your presenters for the session today. Why are we doing this? Really simple. Tax laws that affect your business are constantly changing. And this time of year seems like even more than others. It's our job, along with your advisor's job in your market, to stay ahead of these changes. We want to stay ahead of that for you. There's traps to avoid. There's opportunities you want to take advantage of when it comes to dealing with your taxes, and you want to get it right the first time. So we just wanted to give our clients a chance to sit with some of our national tax team experts, hit a couple core topics like Sue mentioned, and then open the forum to have questions in kind of an informal environment. And we plan to keep doing these. We welcome your feedback. We want to make sure we're answering questions that you have. Do fire away with questions as well, like Sue said. Thank you for your business. Thank you for your support of Padgett. It's a privilege to serve you. And just real quick, I'd love to tell you just a little bit about Padgett Business Services, maybe some things you don't know. Padgett is America's small business accounting firm, and we have been for over 55 years. You might not know we have over 180 offices here in the United States. We have 100 offices in Canada, and we're dedicated to being the experts in supporting the accounting needs of small businesses like yours. As I mentioned, I'm a former business owner myself. I know the need to have high quality, trusted guidance, especially when it comes to the business's financial picture and the complex, ever-changing world of regulations and taxes. So your local Padgett advisor, along with our corporate national tax team, two of whom you'll hear from today, they know what they're talking about. They're experts that you can count on during this time of year. And when it does come to taxes, I mentioned we have a national tax team, including feet on the ground in Washington, D.C. at our capital, to make sure you're getting up-to-date information. So we're going to stay ahead of this so you don't have to. Our priority is getting you back to your business. We're going to handle the accounting, the tax, the payroll with one mission in mind. And it always goes back to just giving our clients peace of mind when it comes to the financial picture of their business. So we appreciate your support. Let's get straight to it. Please ask questions. I want to bring in Roger Harris. Roger has been the president of Padgett since 1992. He's also a subject matter expert, complete subject matter expert on all matters of small business accounting and tax. He's been quoted in Wall Street Journal, Bloomberg, testified before Congress on matters of small business, taxes, and accounting, as well as been named one of the 100 most influential people in the accounting profession here in the United States, and because of his expertise around this. So Roger, good afternoon. I'm going to bring it over to you and let you take the floor, sir, but thank you.
All right, Jeff, thank you for the nice introduction. And thanks to all of you for joining us today. As small business owners, I know how busy your days are, and we want to respect that and try to give you as much information as we can, but do it in a way that doesn't take you away from the real important task, which is running your businesses. And we really appreciate your loyalty to Padgett and your attending today. We're going to keep things, as I know small business owners like. You like things at a high level and you want to know how it impacts you, and you're less concerned about the details than the results. But let me caution you that details can sometimes be important and sometimes they do matter. And so I would hope that if we can pique your interest and make sure that you're aware of all the opportunities and programs that are out there to benefit you, that at the end of this, you will schedule a consultation with your nearest Padgett office and work through the details with them, because as you probably know, taxes can get very complicated. And if we tried to cover every detail of everything we're going to cover today, we could, first of all, bore you to death and keep you here for longer than you want to stay. So we're going to keep it at a high level, but there's some very important things that you need to know that are available to you, and we're going to try to cover that. We're going to start by talking about something that has a lot of people have already submitted questions about, and some new questions that have been brought about the employee retention credit. But what's interesting is the employee retention credit, at least in the tax world, is not that new. This actually was created, if we look back a year, and it's been a tough year to look back on, but if we look back a year ago where we are today, the first bill that was passed was something called the CARES Act. As Washington likes to do, they put nice little names on the bills. And this was actually part of the original bill, the CARES Act. And the idea was to reward employers for retaining their employees in the form of tax credits, which could be refundable. So let's start by saying what happened originally was that for the year 2020, when the CARES Act was first passed, each employee up to $10,000 in wages for the year. So for all of 2020, there was a 50% credit against that first 10,000 in wages. So that was a $5,000 credit that each employee that you had was worth to you. Now, what did it take to be eligible to get that 5,000 or 50% of what they made if it was less than 10,000 for the year? You had to meet one of two tests. The first test that's mentioned on the screen is what we call the gross receipts test. You had to have shown a decline in revenue of over 50%. If that wasn't the case, and this second one is probably one that many of you face and some of you still face today, is that you had to have your operations either fully or partially suspended by a COVID-19 order. That could be a local, it could be a state, it could be a federal. This one, again, probably at some point in 2020, all of you were covered under some sort of order like this. So what it meant was for 2020, when the CARES Act was first passed, each employee had a potential value to you of $5,000 for that year. And you would take that credit by, first of all, not paying the payroll taxes that you withhold from your employees and submit on a regular basis. And to the extent that the credit exceeded those payroll taxes, then the money became refundable. So if you go back to your business at the end of this and look out in the floor or wherever your office is that you're looking at, each person out there who made as much as $10,000 working for you in 2020 had a potential credit to you of $5,000. So simply, if you had 10 employees, there's $50,000 of credits sitting there available. Now, if you're sitting around wondering, well, it's 2021, 2020 is over, have I lost those credits? The good news is you have not. They are still available to you. There's some amending of returns that need to be done. We'll talk a little bit, Annie will cover a little bit of some coordination events, but these credits are not lost because the year has ended. So those dollars of credits are still available to you. And if you qualify, you need to take advantage of getting this money, because now that 2020 is over, all of it will be refunded to you because you're no longer making payroll taxes relating to those years. So that's money that's sitting there that you can put a request in and get those dollars. In 2021, in mid of 2020, Congress updated the program. And what the change did in the changes to it was a couple of important things. Number one, and maybe most importantly, the credit went from 50% to 70%. Number two, where the 2020 credit was based on annual wages, in 2021, the credit is quarterly wages. And it extended the bill to the end of June. So as we sit here today in late March, an employee who earns as much as $10,000 a quarter now is eligible for a 70% credit or $7,000 for this first quarter of 2021. And potentially, since it was extended till June, a $7,000 credit for the second quarter. So now that employee who was worth $5,000 to you for 2020 just picked up an additional $14,000 in value. $7,000 for the first quarter, $7,000 for the second quarter. Again, that's assuming they make $10,000 in those quarters. If they make less than that, it's 70% of whatever those wages are. So again, now the value and the credits are continuing to get bigger and bigger. The other thing they did was that gross receipts test that was 50% was lowered to 20%. So now, again, you don't have to meet both, but you have to meet one or the other. So if you're either still under a government shutdown order or partial shutdown, or your gross receipts have dropped by at least 20%, now those employees are now worth $19,000 per employee. Because we're in 2021, you do have the ability to offset and get immediate benefit of that money by offsetting current payroll taxes. If the credits exceed, then you get money refunded to you. But it's changed yet again. In the bill that was passed just this past few weeks ago, the employee retention credit was then extended all the way out till the end of 2021. So now we have a full year of available credits for the employee retention credit. So we have gone from a year ago, an employee being potentially worth $5,000 in credits to today being worth $33,000 in credits. $5,000 for all of 2020 and $7,000 for each quarter of 2021. So as you look at your employees out there, think about the value that they are in employee credits. Again, to either immediately offset those dollars that you're sending to the federal government from the withholding, or to the extent that these credits are going to exceed those liabilities, money that will be sent to you. We don't know how quickly those dollars will be sent to you, but there's huge dollars in the employee retention credit. And if you have not taken advantage of it, you have not analyzed your business to see if you're eligible, it's time you sit down with someone, again, your local Padgett office or the nearest Padgett office, and begin to look at this. This is a lot of money that the government has made available for you. You're entitled to it, and you need to make sure that you get the money that's out there. Somebody's going to get it. Might as well be you, because you've gone through the same tough last 12 months like everybody else has. Now, two questions are probably, why have I not heard about this before? If all this money is out there and I should have been getting it, why didn't I get it last year? Why am I just now hearing about it? And isn't there some coordination or some issue with regard to PPP loans? Remember I said details sometimes matter, and they do. And I'm going to ask Annie to come in, talk a little bit about why you're just now hearing about it, because it really has to do with something that probably a lot of you participated in, which is the payroll protection loan program, the PPP loans. And some changes were made that now have brought the employee retention credit back to the forefront. When this was first passed a year ago, we probably didn't think much about it. So Annie, why don't you take over, welcome, and talk a little bit about the PPP loans and how it impacts the employee retention credit.
Sure thing, Roger. Thank you. And I see questions coming in the box with how can you do this, and can you do this, and the ERC. And originally the answer was no. You were given two different programs. One Roger just spoke about, and the second program, the Paycheck Protection Program. Well, that was a loan that you could apply for. And the money, depending on how you use the money, it could be forgiven, but you weren't able to do both originally. Well, now you can. So now you're starting to hear about many people needed the money, they needed the cash to run their business. So they went towards the PPP program first. Well, now you're learning that you can do both. So it's important to note that if you have already received PPP money, you're in the loan forgiveness process, you're waiting for your second round, whatever it may be, you will still qualify, you could still qualify for the ERC. So let me just mention a little bit about the PPP. There has been a lot of talk, and as Roger explained, a lot of changes from time to time. They've made it so that there's actually two rounds now. So the first round, ran out of money, then they refunded it, and then now we've got a second round. Generally, the qualifications to get a PPP loan remained the same. The maximum amount of money you can borrow is 2.5 times your average monthly payroll costs. And of course, that's a definition that is sort of a novel at this point. But yes, the money is out there. For a while, we weren't sure how the taxation or the deductibility of the expenses were going to be treated. But after several months, we are certain that the PPP loans, if you spend the funds on the correct amount of expenses, they're non-taxable, not taxable to you. It's like free money. Excuse me. What about the money that you spend for expenses? Well, those have to be used on certain items. And in the beginning, it was more payroll, mortgage, rent, and utilities. And there was a percentage there. It was a 70-30 split. Now it's a 60-40 split. But they also expanded some of the items that you can spend your money on. So things like protective gear, or getting your environment up to COVID regulation, or maybe you had damage to your business as a result of this. So they have expanded what you can spend the money on. And that matters because that is the determination for whether your loan will be forgiven. You do have to apply for forgiveness. There is an application, just like you applied with an application for the money. You will apply for forgiveness. But the important note here is time is running out. As of today, this expires at the end of the month. Sure, there's talk of expanding it or extending it, or maybe there'd be a third round. But as of today, these funds will expire on March 31st. There are some special rules on how to calculate this for some small proprietors. So if you're a Schedule C sole prop filer, there are some easier, more friendly terms for calculating the amount of your loan. So just keep that in mind. And there's also a special program called Restaurant Revitalization Fund. And that is for certain restaurants that meet criteria of losing a certain amount of business. And that is also available for restaurants who received a PPP. So if you are a restaurant owner here and you're wondering about this new fund, because you had a PPP doesn't mean you can't also get money from the new fund. So keep that in mind, reach out to your office if you fall into any of these categories or if you have additional questions. And I see some questions coming in, so hopefully we'll be able to answer some towards the end. But I'm going to turn it back over to Roger and we'll keep moving on.
Just to summarize a couple of things before we move on to this, based on some of the questions I've seen, just again, in December is when all of this ability to do both changed. So yes, you can still go back and do 2020. That's in the form of amending returns and getting refunds. Since we're in 2021, you can take it in real time. And if it exceeds the real time balance, you can then take the option of having the additional funds refunded. So the reason you're just now hearing about it was because until December, I think 27th, when the bill was signed, the prohibition from doing both was changed. Now, most of you probably know that we have gotten an extension of this tax season. If you remember, last tax season didn't end until July the 15th. This one is going to be extended for certain people till May the 17th. That's only going to apply to your individual tax return. So it means that your 1040 is now not due until May the 17th. The payment for that 1040 is also not due till May the 17th. But there is a little catch for all of those that pay estimated tax payments, those quarterly checks that you have to write. The first one has always been due April 15th, and that has not changed. That one is still due April the 15th, even though your return is not due until May the 17th. So you're going to have to make an estimate on next year before you have to finalize your return for this year. Probably doesn't make a lot of sense, but that's the rules. But like everything in the world we're in today, something could change today, tomorrow. We're going to talk about unemployment benefits in a minute, and something changed on that yesterday. So, but as of today, your filing deadline for your 1040 is May the 17th. As you see, there's a caution here. Be careful, because not everybody's state has yet accepted the extended deadline. We anticipate they will. All of them, to my knowledge, took the later deadline last year, but they have to wait until each state does. So it's possible that you may have to file your state return before your federal return, but I'm going to assume that states will probably adjust. We had another bill signed recently, and the part of that that probably got the most attention for most of us, because we were all wondering if we would get any of the money, was the change to what are called economic impact payments or recovery rebates or whatever people call them. The recent bill generated $1,400 payments. So that's the third payment that has been sent out due to the COVID-19 pandemic. If you remember, back in March, there was $1,200 for most people, then $600 in December. Now we're in the middle of a process of sending out $1,400 payments. Don't worry if you haven't gotten it yet. They're still sending them out. A lot of people have gotten their checks already, but if you haven't gotten it direct deposit or gotten your checks, that doesn't mean you will not get it. You may not, but doesn't mean you won't. But these credits will be reconciled at the end of next year. So in the worst case scenario, if you do not get a check for whatever reason, when you file your tax return this time next year, you will receive whatever you're entitled to through the filing of that tax return. But do not panic. These checks are still being issued. They're $1,400. They're a little, just so you know, broadly, if you're a single person, if you have 75,000 or less, you should receive the full amount. It's going to phase out when that single earner has $80,000 in revenue or in income. And for a married couple, it's basically double that. It's 150, up to 150, you'd get the full amount. And at 160, it would have phased out completely. So there's a little tightening of the people who get it. But these checks are currently, a lot of people have already received it. Others will be receiving them shortly. Again, it's going to be based on your 20 return if it's already been filed. If not, they'll use 19. Now, they have said this, one thing I do need to point out, if you have not filed your 20 return yet, and now you have till May to do it, and they base it on 19, when you file your 20 return, if additional payments were due, the IRS says they will calculate those additional payments and send them to you. Obviously, that has not happened yet because no one has been in this situation, but it does not mean you have to refile amend your return if it turns out that you would have gotten more based on your 20 return than 19. So file as soon as you can. Obviously, if you haven't gotten the money, but don't worry, you'll get what you're entitled to if and when you file that 2020 return. So another important part of that bill has to do with unemployment. Annie, you want to talk a little bit about what changed as it relates to unemployment?
I sure can. And as Roger mentions, nothing seems to stay the same for long. But in general, unemployment historically has been taxable. There's withholdings on it generally. You apply for unemployment and it is treated as taxable income. Given the year that we've all had, in March, the IRS said that $10,200 of your unemployment that you earned in 2020 could be non-taxable. And that would be based on a household. So if you file married filing joint, it's based on a threshold of 150,000 of your household's income. Same for someone single. So it's a little odd there. But just remember that $10,200 is the maximum amount that each person in that household, so husband and wife, can each take $10,200 if you earn less than 150,000. Now, the big question is here, they came out with this in March and a lot of taxpayers will file their return in February. So what do you do now? That seems to be somewhat of a sticky point. Right now, the IRS is encouraging taxpayers to just sit tight. We are super hopeful that we will not need to amend returns and that the IRS will be able to make corrections on their side when processing the returns, but that hasn't been stated so clearly yet. Also, the calculation of this 150 sort of threshold has changed since March 11th. It actually changed last night. So, as you can imagine, tax practitioners are getting their software updated and getting used to the new rules. Hopefully they will not change again. But if you earned unemployment in 2020, your ears should be perking because you potentially have the benefit of excluding $10,200 of that from your tax return. Another item, for those of you who purchase your health insurance out on the marketplace, they have made it easier for you to actually qualify for insurance. And only for 2020, they've allowed you to not have to pay back any money if you received in advance. So when you go out on the marketplace, you could get an advance. It's called an advance premium tax credit. So when you filed your tax return, you would reconcile that and either pay it back or maybe get more, depending. This year and this year only, if you received an advance premium tax credit and you go to file your return and you got too much, they're not making you pay it back. You don't have to give it back. It's kind of a freebie. So that's something else to also keep in mind. A few other things, and then we'll take a couple of questions. Roger, a look ahead. There's some stuff that is going to affect certain taxpayers in 2021 that's new.
Right. And there's a lot that is for 2021 only. These are things that as of today are stated to be 2021 only. The child tax credit, many of you with young children are aware that you get a tax credit. They took away the dependency exemption, as we all thought it meant, and gave us a credit instead. That credit has been increased to as much as $3,600. Again, a lot of details as to what it actually is, but it could be as much as $3,600. It's $2,000 now. They are also, the intent is to also make this an advance payment. The service was told in this bill to find a way to begin sending this money to you, hopefully by the summer. And then at the end of the year, you will get a form showing how much of this money you have already been paid. And when you file your tax return next year, you'll either get the difference or pay back the overpayment, whatever the case may be. That system for sending those payments doesn't exist yet. The service is confident they can put it together. We'll see how well it works, but the credit has been increased and it will be sent to you as an advance. They also, those of you that have had to pay for dependent care expenses and have historically gotten a tax credit for sending your children to after-school programs so both parents could work, the amount that you can put into those programs and deduct them has been increased. The credit has also been made refundable. Before, it was not refundable. It was just a credit. Again, both of these are for 2021 only, at least as of today. They could always be extended. And then maybe a prediction of something to come. Student loan forgiveness. There was nothing in this bill that forgave any student loans per se. But what it did say is that if a student loan is forgiven between January 1st of 21 and the end of 25, then those forgiven funds would be non-taxable. So it's almost like a prediction that, and if you've been following the news, you've heard a lot of discussion about the desire to forgive some or all of the student loans. This would be kind of setting the table so that if those loans were ultimately forgiven, that the amount that was forgiven would not be taxable income. But let me be careful, make sure you understand, this bill did not forgive any student loans. It only set the table for those that could be forgiven in the future and that those folks would not have to pay taxable on those forgiven funds. So where are we now? And before we take questions, we're in the middle of a tax season that we think is going to end in May now, middle of May. Things are changing rapidly and we all need to take a deep breath and have a little patience and understand that something we may tell you today could be different tomorrow. And that's why we're here, to make sure that we're telling you whatever is the most current information as of that point in time. I hope you understand that there is a lot of for those of you that are small business owners, and I assume that's most of you that are on this session today, the government has done a lot to try to help you, and there's a lot that's available to you, both in the retention credit, the PPP loan program, which we think could be extended beyond March 31st. We want to be here to help you make sure that everything that your business needs and is entitled to, that we help you get that. So I really encourage you to let us do the worrying for you, because we're used to it. That's what we've become accustomed to, that we know things can change and we know you want answers and we'll give them to you as fast as we can. So let us help you. We want to make sure that if you're entitled to some money, that you get it. And that's part of why we did this today and why we'll continue to do them, and we'll try to keep you updated. And that's why we're going to answer some of your questions, if you have any, to take us through the rest of our time to make sure that you understand anything that we've said here today. So I guess, Sue, are you kind of the driver of questions? And
Yes, we've got a bunch of questions in the chat section, some of which we've already answered, but I'll get to the ones I have not. And I know that we also had some questions that were submitted from the registration, so I don't want to miss those as well. So let's start out by a hand that's been raised. I'm going to go ahead and ask to unmute you, and you can go ahead and ask a question.
Hi there. Thank you so much. This is probably going to sound like a really dumb question, but
There are no dumb questions here.
Not in this.
Thank you. So with the employee retention credits, if you've paid, you filed your 941s, you did everything for the payroll. I don't understand they're actually going to give you money back based on what you paid. I mean, do you actually get money, or is it just go towards future taxes? That's what I'm unclear about. I don't really understand what that means.
Okay, Karen, that was actually a very good question. That was not.
Thank you so much.
The answer is both. For 2020, since you filed some 941s, there's a form. I don't want to get too much in the weeds here, but there's a form called a 941X. And what that does is it amends those returns and has those credits then refunded to you for 2020. So those were those $5,000 credits we talked about. So if you have 3 employees that qualified in full, you now have 15,000 to go back on those 941X, and those will come in the form of checks. Well, checks, or who knows how you'll get the money. I hope they don't send you a debit card, but you get something other than a offset. For 2021, since we're in real time now in 2021, the first ability for you is to offset those monies that you're giving the government every month on your current employees, so that you get immediate benefit of those funds by not sending them. And then to the extent that the credits for 2021 exceed those taxes you would pay, then they will be refunded to you based on the filing of your current 941 for each quarter in 21.
Okay, so it's relief on the actual wage paid and the taxes paid, even if you filed for the payroll protection program and received funds. It's
Yes, there's some coordination that has to be done. If you've got a payroll, let me use this example. Let's say you have $10 in wages. I'll keep the math simple because that's easier for me. And you use $1 of those wages to have your PPP loan forgiven. The retention credit is on those $9 that remain. You can't take it on the full 10 because one of it went to have your PPP loan forgiven. So that's why it's important to work with us till particularly if you're still in the process of having a PPP loan forgiven, we want to work with you to make sure we protect as many of those wages from for the ERC as possible by looking for those other expenses like rent, utilities, or whatever, so that we keep as many of that $10 available for the ERC as possible. So there's some planning that can be done if you haven't gotten forgiveness yet. If you've already done it, we have to work with what we have and try to see how much is eligible.
Okay,
Trying to
great.
keep it as simple as we can. It gets a little more complicated than it should be, but that's why we're here.
I think
All
no
right.
double dipping on the payroll side of it.
Okay, and
Use the wages for one program, you can't use those same wages again for another program.
right, but there is a way to coordinate the funds.
Yes.
Okay,
Exactly.
and you did say that we don't have to have a demonstrated certain amount of loss. It's just if we were locked down and we couldn't function.
There's one of 2 tests. One can be gross receipts, which is defined 50% for 20, 20% for 21 decline. Or if you are fully or partially shut down or operations are suspended due to a government order from your local, state, or federal. They go so far as, and I think you will appreciate this, to say a speech by a politician is not a government order.
Okay.
So it has to be something that your local, state, or federal government actually issued. Now, it's our hope that that one goes away sometime in 2021. And
Yes.
we'll be more inclined to have to use the loss of gross receipts. But my sense is 2020, that's going to cover a lot of folks. Those
All
are great
right.
questions, Karen.
Thank
Great
you
questions.
so much. Thank you.
Wonderful. I'm gonna go
Our
ahead.
answers were half as good as your questions.
Yes, and that question hit on a lot of areas that had a lot of these chat questions, such as how do you, what form do you use? 941? Is it 2000? Or is it 2000 and 2001? It's 2000, 2001. So that's great. We hit a lot on. I'm going to shift to unemployment. The recent change of non-taxable unemployment of the 10-200, is that also for 2021 or just 2020?
It's right now, it's 2020. Anything is possible. There's talk of another tax bill, though that one seems to be more about increasing taxes than decreasing them. But as of for right now, it's just for 2020.
So the question, so allowing both the PPP and the ERC was retroactive back to March 2020. Just to reiterate that.
Yes.
Yes. Good. Is there a specific definition for gross receipts for those who weren't shut down?
Yes. To avoid getting too technical, it's pretty much common sense that it's more the odd things that you wouldn't include in gross receipts, but it doesn't include the sales tax you collect and things like that. But
For a travel agent, it doesn't include certain things. So
yeah, I mean, it's pretty straightforward, but I would say if you're on that border where you're right at either 50% or 20%, that's where it's important to work with us to see exactly what we can pull in or do whatever to see if you qualify. And that's assuming, again, that you don't meet it under I just want to make sure that people understand it's either or, it's not both. You don't have to have a loss of receipts and be under a government order. If you meet one, gross receipts can actually go up.
Correct.
yeah, you don't have to wait for the PPP loan to be forgiven before you calculate ERC. Maybe
You do not, you can do it together. A lot of people probably have already filed forgiveness for their first PPP. Obviously, if you have not, and you qualify for the ERC, there's that opportunity to kind of shift wages to ERC and use some of the other qualifying expenses for PPP. So, but you can do them both at the same time.
Yeah, 2020 is it is what it is for a lot of people. Those things have already happened, but it's really important that you work with somebody who can monitor what's going on in real time in 2021, because you're going to be potentially coordinating with a PPP loan and the ERC, and you're taking credits against real-time deposits. So 2021 is a little more complicated in some ways, but that's why we're here. So just let us know, we'll get you through it.
were there any questions coming in from the registrations that we want to hit on?
Yeah, actually there are. So we asked some, when you registered, if you had any questions, and so I've sort of got them here and I grouped them into sections. As it pertains to those stimulus checks, the EIPs, they've got all kinds of names, but the money that comes from the IRS, that's free money. They are really free money. That is non-taxable income to you. Yes, children do qualify for that third round. They are also qualifying dependents, I should say, are also the $1,400 threshold. So keep that in mind. And I saw yesterday that the IRS is sending another huge round of checks and debit cards. So if you're just checking your bank account, make sure you go to the mailbox and see if maybe your money's sitting out there. Because, we got used to the direct deposits for those. And some of them are coming in other forms of payments. Can I deduct home office expenses because I've been working from home for nearly a year? If you are an employee, so if you are a W-2 earner, you cannot deduct your home office expenses. Now, a lot of employers are probably on here, and maybe your employees are asking you to help them with beefing up their workspace at home, maybe improving their internet, a second monitor, who knows what. It is up to the employer. They can set up a reimbursement plan to help the employees with some out-of-pocket expenses of working from home. It's not mandatory, but that is an option if you wish to help out some employees with, working from home. If you have not received your stimulus round 3 check, so there's a tool on the IRS website. It's called Get My Payment. And for a while, that tool was giving taxpayers information about round 1 and round 2. Round 1 and round 2, regardless of whether you got both of those in 2020 or if your check was late and you got round 2 in 2021, both of those, round 1 and 2, are a 2020 tax return reporting item. The third round is a 2021 reporting item. The tool on the IRS website used to focus on the first and the second rounds. So it was very easy for you to go there, see what you got, see what the status is. Well, now that there's a third round, that tool now only shows the third round information. So keep that in mind, and you'll reconcile the first two on your 2020 tax return and number 3 on your 2021 tax return. There were 2 questions as it relates to nonprofits and their ability to get both ERC and PPP. And the answer to that question is yes. Nonprofits, including 501c6, which was the specific question, is eligible for the ERC. And originally they were not eligible for the PPP, but now they are. The FAQs on the SBA website says exactly that. Many 501c6 nonprofits who did not qualify for a PPP loan during the first package are now eligible for the second round of PPP. So we had 2 questions on that. Hopefully that answers those questions. Feel free to type in the chat. Sue is monitoring that, so I don't want to miss anything. Another question here, can I use my PPP funds for marketing, internet, supplies, equipment? The answer is, well, equipment's kind of hard, and supplies, because I'm not really sure if maybe it falls underneath the protective PPP equipment. But in general, like your internet, marketing, those types of expenses are not going to be qualifying expenses for the PPP. There's a list out there with some examples. I'm certain your office can direct you and kind of help you draw the gray line between the expenses. Let's see. Yes, the PPP loans that are forgiven are not treated as income, and the related expenses that are used can be deducted. We have
On a
that
federal level.
at a
Again,
federal level.
states are making their own calls there as to whether or not they will treat the forgiving funds and the expenses the same way. Watch that, but on a federal level, yes.
There was a question that was submitted about the recovery business startup portion of the American Rescue Plan. And what that is that, let's see, how do I say this? The recovery startup business is, originally you had to be in business on February 15th in order to qualify for a lot of these programs. So a lot of startup companies that were just getting going in 2020 were, if it wasn't before February 15th, they kind of got lost in the weeds. And so through the American Rescue Plan, they have invited and allowed some of these startup companies with less than $1 million in gross receipts to be eligible for some of these credits. So I'm not going to go into particulars about how much and this ratio, but you're right, there was a provision in the American Rescue Plan for startup businesses. So if you're out there and you want to raise your hand on that one, then that's probably a little bit particular to your situation, but just know it's worth talking to your office owner about, because you might be able to get some funds or credits from that. I think that's all I have. Sue, has anything else come through?
You just had one pop up, and I'm just going to read it and see if you can interpret it. Is having a 50% net loss in a quarter over quarter, what qualifies for 2020, or does it have to be a 50% less in gross income only?
I'm going to guess they're asking about net income versus gross income. The law is written as it relates to gross receipts, not net profit, which is what I think the question is. So having a decline in your net profit.
Is this for ERC or PPP? Just so we can.
I would assume it's ERC, given
Okay.
the 50% number. But it's based on gross receipts. I guess they assume that the bottom line will follow the gross. But if we're understanding the question correctly, it has to be gross receipts for 2020 with the decline, quarter over quarter.
And just another item, the slide deck, the slides that we presented today are in the front, but there is an appendix attached to that. And that appendix has a lot more of the specifics and the details, the actual thresholds, et cetera. So if you're like, okay, I understand the main concept, but now I'm ready to dig a little deeper and see what all this means, look at the slides that follow the slide deck. That may answer some of your questions as well.
Let's see. Gross receipts is quarter to quarter or whole year gross receipts for ERC?
Quarter over quarter.
Quarter.
For 2021.
Yes.
Well, it's quarter over quarter really in both years. The percentage is different. It's 50% in 20 and 20% in 21.
Okay, I think that's about it. I don't have any more chat. I don't have any raised hands.
Okay. Well, before we turn it back to Jeff, I want to thank everyone for taking time out today. I hope you found this beneficial. If you did, we would like to hear from you. And if there's things we can do better, we'd like to hear from you on that too. So again, thank you for all you've done for the past 12 months. I know it's been tough. Thank you for attending today. And Jeff, all yours.
Roger, Annie, thank you so much for walking us through this. And I want to thank all of the attendees who've just been here. Great questions. There's a lot to deal with right now. There's just one follow-up is contact your local Padgett office for other questions that you have. And we aspire to have more of these. If you find them valuable, let your local office know. Give us feedback. We'd appreciate any feedback you can give us. Just what else do you want to hear? What else is on your mind? What other questions would you like to have answered? We'd like to do this in the future. So we have a feedback questionnaire and we read those. We'd like to know, what are we missing? What else would like to be covered? So please do that. Also, thanks to those of us who are in the home office, in our local offices who attended today as well. Appreciate all of you out there supporting us and also letting your clients know about this. That's all we've got for today. So we're going to give you 7 minutes of the hour back. Good luck. We're always here for you. PadgettBusinessServices.com if you need to follow up with us, if you need to reach out to your local office. And also other businesses in your community, let them know about us. We appreciate the referrals. So that's it for now. We're going to sign off. Thank you so much, and we'll see you down the road. Bye-bye.